For years, London has ruled as the financial heartbeat of Western Europe, a city where deals worth billions are struck every day. But there's a new contender on the rise: Ireland. Dublin's financial sector is expanding rapidly, attracting more investment, more talent, and making waves in the industry. According to a latest Statista report, London is the leading financial centre in Western Europe as of March 2024. Yet London may not continue to top the rank in the near future. But why is this? Could Ireland really overtake the UK as Europe's next financial centre? What does Dublin have that could make this a reality? Join us as we dive into the numbers, the trends, and the possibilities. Is a shift in Europe's financial power on the horizon? Come, let's find out. The winds of change are blowing across the Irish Sea, signalling a new era of opportunity and transformation. As the United Kingdom navigates the choppy waters of its departure from the European Union, a new contender for the title of Europe's financial hub is emerging: the Republic of Ireland. Dublin is at the forefront of this transformation, with its skyline rapidly evolving to accommodate the influx of financial institutions and multinational corporations. With a young, educated workforce, competitive tax rates, and a business-friendly environment, Ireland is positioning itself as a prime location for investment. Ireland is attracting significant investment from multinational corporations, particularly in the financial and technology sectors. Companies are drawn to the country's robust infrastructure, supportive government policies, and the promise of a dynamic and innovative business environment. The question on everyone's lips is this: can Ireland truly step into the shoes of its larger neighbour and become the new financial capital of Europe? As the country continues to grow and evolve, it is clear that Ireland is not just rising, but soaring as a formidable player on the global financial stage. The future looks bright for this Emerald Isle, as it embraces its new identity as a financial powerhouse. Before we dive deep into the subject, welcome to RichInsider. If you're new here, consider subscribing to our channel and stay updated with all our latest developments. The UK's decision to leave the European Union sent shockwaves through the global financial system. The referendum result in 2016 marked the beginning of a period of uncertainty and upheaval for the financial sector. Investors and institutions alike were left grappling with the potential implications of this monumental decision. London, the city which had thrived as a hub for international finance, was now facing the prospect of losing its privileged access to the European market. This shift threatened to undermine London's status and its ability to attract global talent and investment. Financial institutions accustomed to operating within the EU's single market were faced with the prospect of losing passporting rights that allowed them to do business seamlessly across the bloc. These rights had been a cornerstone of their operations, enabling them to offer services across the EU without the need for additional regulatory approvals. The potential loss of these rights forced many firms to reconsider their strategies and operational bases. According to EY's Brexit tracker, over 7,000 financial services jobs have moved from the UK to the EU since the 2016 referendum. This exodus of talent has had a significant impact on the UK's financial sector, with many skilled professionals seeking opportunities in other European cities. The relocation of these jobs is not just a loss of personnel, but also a loss of expertise and experience that had been built up over years. Billions of euros in assets have also been relocated as financial institutions seek to ensure continued access to the European market. This movement of assets is a clear indication of the lengths to which firms are willing to go to maintain their operations and client relationships within the EU. The transfer of these assets has also had a ripple effect on the broader financial ecosystem, influencing everything from regulatory frameworks to market dynamics. Dublin, with its English-speaking workforce, common law legal system, and proximity to London, has emerged as a prime destination for these relocating firms. For instance, as per reports from the UK's financial services exports, Ireland is the top EU country with an increase in exports in the last 3 years in a row. Compared to the situation a decade ago, Ireland has seen a massive surge in financial activity, with many companies setting up new offices and transferring key operations. Of course, Ireland's rise as a financial hub is not solely due to Brexit. The country has been steadily building a reputation as an attractive location for financial services companies for several years. This transformation has been driven by a combination of strategic policies, a favorable business environment, and a proactive approach to international trade. The low corporate tax rate of 12.5%, significantly lower than the UK's 25%, has been a major draw for multinational corporations. This competitive tax regime has encouraged numerous global financial institutions to set up their European headquarters in Dublin, making it a bustling centre of economic activity. Beyond the tax advantages, Ireland offers a stable political environment, robust legal framework, and a highly educated workforce. These factors collectively create an ecosystem where businesses can thrive and innovate. The government's commitment to maintaining a business-friendly climate has further solidified Ireland's position on the global financial stage. In addition to finance, Ireland has also become a major hub for technology companies. The tech sector has seen exponential growth, with Dublin emerging as a key player in the European tech landscape. This growth is not just limited to big names, but also includes a vibrant startup scene. Google, Facebook, Apple, and Microsoft all have significant operations in Ireland, attracted by the country's skilled workforce, competitive costs, and favorable tax regime. These tech giants have established extensive campuses, research facilities, and innovation centers, contributing to the local economy and creating thousands of jobs. The presence of these multinational tech companies has fostered a culture of innovation and entrepreneurship. Ireland's universities and research institutions collaborate closely with the tech industry, ensuring a steady pipeline of talent and cutting-edge research. This thriving tech sector has created a virtuous cycle, attracting further investment and talent to Ireland. While Ireland's star has been rising, the UK has been grappling with its own set of challenges. The political turmoil surrounding Brexit has created a climate of uncertainty for businesses, making the UK a less attractive place to invest. The UK government's post-Brexit policies have also raised concerns among businesses. The introduction of new immigration rules has made it more difficult for companies to attract and retain talent. Meanwhile, the UK's departure from the EU's single market and customs union has led to increased bureaucracy and costs for businesses that trade with Europe. In contrast to the UK's more uncertain political landscape, Ireland has benefited from a stable government and a consistent pro-business approach. The Irish government has actively courted foreign investment, offering a range of incentives and supports to companies looking to establish operations in the country. Ireland has consistently ranked among Europe's top 10 destinations for FDI. In 2020, the United States accounted for 58% of FDI projects in Ireland, followed by the UK at 17%. Despite its many advantages, Ireland is not without its challenges. The country's rapid economic growth has put a strain on its infrastructure, particularly in the areas of housing and transportation. Dublin, in particular, is experiencing a severe housing shortage, driving up rents and making it difficult for workers to find affordable accommodation. The Irish government is aware of these challenges and is investing heavily in infrastructure projects, including new housing, public transport, and broadband networks. However, it remains to be seen whether these efforts will be sufficient to keep pace with the country's rapid economic growth. So what are your thoughts about Ireland? Do you really think Ireland will surpass the UK to become Europe's next financial hub? Share your thoughts in the comments below. Until next time, take care.